Hello and welcome back to the Coin Stories podcast. I'm your host, Natalie Brunell, and I'm talking to leading voices in Bitcoin and macroeconomics about their origin stories, Bitcoin headlines and news topics, and this movement to fix the world by fixing the money. This podcast does not provide financial advice. Before I share this week's episode, here are some messages from my sponsors who make this show possible. First of all, are you ready for Bitcoin 2023? I certainly am. This year's Bitcoin conference was absolutely amazing. I got to spend a week in Miami with tens of thousands of Bitcoiners from around the world, and I'm so grateful that I had the chance to anchor Bitcoin Magazine's live desk and MC the main stage. If you missed the event, you can catch all 3 days of incredible Bitcoin content over on Bitcoin Magazine's YouTube channel. And also, it's never too early to start making plans to attend the next conference. Bitcoin 2023 tickets are already available and super early bird rates do not last long. So you can visit b.tc/conference/2023 and secure your pass before prices increase. This show is also powered by Dogecoin, my favorite place to DCA without the crazy fees. Dogecoin recently launched an amazing initiative called Crypto for All, which is aimed at democratizing knowledge and access to Bitcoin. Dogecoin is one of the fastest growing and most secure global cryptocurrency exchanges that serves all your needs for Bitcoin and is committed to investing in educational content, funding crypto developers and entrepreneurs from underrepresented groups, and helping more diverse talent work on crypto ecosystem projects and careers. Dogecoin has actually contributed more than $1 million to Bitcoin core devs and counting, has one of the most active Lightning nodes, and recently launched Sats mode. To open an account and start stacking, head to okcoin.com/Natalie and get $50 in Bitcoin when you sign up. All right, well, I'm super excited because of all the guests that I get requested, I probably don't hear more requests for anyone than Nic Carter. So,
is that right?
You guys, I finally did it. He said yes. Thanks for coming on the show.
My pleasure. Yeah, I'm glad we could finally do it. It's a long time coming.
You flew all the way to Oslo.
For this appearance specifically.
What Jeff said too, yeah. Okay, so first of all, just because I'm curious, what do you think of Oslo? Because it's my first time here, and I think it's beautiful. So what are your thoughts?
Yeah, no, I've never been to Norway before.
Yeah.
I've been to all the other Scandinavian countries and not Norway, and I will say I expected it to be good, but yeah, it's very well organized. Mm-hmm. So like maybe we got to give this whole socialism thing a rethink,
Yeah, but this country is very rich, very
from extracting oil.
Yep.
Yeah.
Yep.
Wow. Okay.
I see. It's all Teslas, and apparently they have this sovereign wealth fund and like $1 trillion in the bank. So everybody here is happy, and it's good.
They do seem happy. We're here. Parliament is next door.
Yeah.
That's crazy. But yeah, it's funny that there's a socialist sort of bent to the government. I think it's the Labour Party is in power here, given that it's I don't know, like extracting oil doesn't seem like it's sort of like in vogue these days.
Yeah.
But they're doing very well out of the fact that there's a war going on,
right,
things like that.
Right.
They're doing extremely well.
Well, both of us are in our home continent, I think. So I want to hear your coin story here, right? Okay, so let's take it all the way back. I know
the UK is not part of Europe anymore. We're free.
That's true. Okay, that's true. But you actually spent a lot of time in the country I'm from, so I know you're a naturalized citizen. So where were you born, and when did you move to Poland?
Oh, so
that's
where
I'm
the linkage
from.
is okay, because you're telling me there's a link.
Yep, we have something in common.
Okay, so yes, I was born in Swaziland, which is now called Eswatini.
Oh, okay.
So they changed the name of the country. They have an absolute monarch. So basically he can just change the name of the country at will.
Wow.
And it was Swaziland, now it's Eswatini, so all my passports became out of date, which was a really annoying thing. Because they basically rug pulled me, right? Because it was like I thought it was called something, and then it's called something else, and like I always get weird questions about that. So that's where I happened to be born. My dad was working for the British government. He was advising the Swazi government on agricultural policy. Like the British Empire never really ended. Like there was still sort of a lot of these kind of like colonial dynamics going on.
Sure.
And but I was born to an English family, and then eventually we made our way over to the U.S. to DC.
But you lived in Poland too, right? You went to school there? To a French school?
Yeah, in the early 2000s, we moved to Poland. My dad was at the World Bank. I always get so much flack from Bitcoiners about that.
Yeah.
That's not in my control, to be clear. You know, I have no control of my dad's career. Yeah, so people think that I'm a Fed because my dad works for the World Bank.
Still.
Yeah, he worked for this sort of subdivision of the World Bank called IFC, which is actually more about private sector lending. Yeah, he was living in Moscow for a while, and so we lived in Warsaw, in Poland. I went to the French school in Warsaw, and I felt very hard done by because I was neither French, certainly not Polish, so it was difficult. I was British, and so it was like. There weren't a lot of Brits at the French school in Warsaw, I'll tell you that.
Well, so what was it like growing up, moving around to all those places and having a dad that did what he did? Like, did you want to work in an economic job or economic
Yeah, I 100%
capacity?
always wanted to work in finance.
Okay.
That's all I ever heard about. I thought I would work in development, as in like international development finance, which is what my dad does. But that didn't end up, I didn't sort of grab me, and I was surrounded by like economics, which was very helpful. I think, I don't know, it's like the family business or whatever. The difference is that I'm in sort of like the private sector, and my dad's been in basically the public sector his entire career. It was something I knew I wanted to do. I'd always invested. My dad let me invest his money when I was 16, and I just made like random stock picks.
Really?
Which in hindsight was like crazy, I don't think if I had a 16-year-old kid, I would never let them, manage my portfolio or anything.
Yeah.
And so I learned, and I started doing that right before the '08 crash, actually.
Oh, wow.
So that's when I first deployed into a bunch of like meme stocks, basically, because I was like a 16-year-old, I was an idiot, and lost like 40% of the portfolio value, like, in a matter of weeks. And I was like, wow, I really suck at this. And then I like kept buying meme stocks, and then they all went up over the next decade. So I always knew I wanted to work in sort of asset allocation or investing. I wasn't sure how I'd get there, and then I had a weird roundabout path, and now I work for Bitcoin, basically.
Wait, so you went to the University of St. Andrews, right?
That's correct.
And then Edinburgh, but you studied philosophy.
Yeah. Well, because I didn't really know what I wanted to do. I didn't have like a specific thing in mind, and I always liked philosophy. I was on the debate club in high school.
Oh, really?
And
I could see that.
yeah, I was the captain of the debate team.
Whoa.
Yeah.
I could totally see that.
I was totally insufferable, yeah. And so you would always, that was my introduction to philosophy, actually, because so we did Lincoln Douglas debate, which is like, you have sort of like a 6-minute exposition and a 7-minute response, and it's like kind of pretty long form. So you have the time to develop concepts. And so I always would search for like a philosophical basis for, the topics being discussed. And so that was actually, I got a, pretty practical introduction to philosophy through debate, which is like, let's find support for these ideas. Let's not just assert things.
Right.
And I liked ethics, and I found it interesting, and that's what I did. At St. Andrews, the philosophy building is, so St. Andrews is like a pretty small Scottish village. It's like maybe 15,000 people, and the philosophy building is called Edgecliff, and it's like literally on the water, on the cliff, and I just spent a lot of the time there just sort of staring at the ocean, not really paying attention. But yeah, it was a good place to study.
Well, you said ethics. Why are ethics important to you? Because one thing I've really liked and noticed about the space in Bitcoin is people are very driven by ethics, and ethics are an important value to them.
Yeah, everything we do is impregnated by ideology, whether or not we realize it. That's very much the case for Bitcoin, right? People think Bitcoin is a technical thing, but no, there's principles embedded in Bitcoin. I mean, a respect for property rights, a desire to have a fair issuance of money, right, through the mining mechanism, a monetary policy which can't be altered by humans, right? these ideas are political ideas, right? When Satoshi designed Bitcoin, they would have said, okay, well, what would I want a monetary system to look like if I could design one from scratch, right? And we never had the ability to do that before. We inherit the monetary systems, right? So there's all this path dependence, and you're just left with this institutional baggage. It's like, yeah, this is just the way it works. The Fed sets the price of money, and that's it. Bitcoin is a from scratch reinvention of monetary policy. And it's funny. It's actually very similar to this thought experiment in political philosophy by this guy called Rawls, who's sort of I would say more of a liberal actually. And I certainly don't agree with him on everything, but he had this idea of you should reason about things as if, especially like the allocation of resources in society, you should reason about political structures as if you didn't know where you'd fall in the structure, right? So he called it the veil of ignorance. It's not just his own concept, but others have talked about it too. So basically, if you were to design a new political system or monetary system from scratch, you should think about it from the perspective of you don't know what your status in that society is going to be.
And whether you'll benefit,
And because you don't want to be self-serving, right? Because, if you're designing a new constitution or something and you're already an elite in the current system, you're probably going to make it very sort of top-heavy and things like that. So I don't know. I think given that we're in the business of sort of like money and, that affects everything in society, it's important to actually reason about these things. So I'm really glad that I spent the 4 years doing that.
Well, studying economics and having your dad involved in the work he was, were you studying all economic theories? Were you exposed to Austrian, or was it mostly Keynesian that you studied when you were younger?
Oh, Keynesian, 100% Orthodox Keynesian ideas. So, I had to undertake my own education in Austrian economics, and that was later. That was actually post-Bitcoin. I got into Austrian econ through Bitcoin.
Got it.
Because, I don't know, I think Bitstein, had the Nakamoto Institute website, and I was like, oh, there's actually some like really interesting thinkers. So a lot of people, they start with Austrian economics, and then they're like, well, Bitcoin's the conclusion of this. For me, it was the other way around.
Yeah.
But yeah, I did like the AP economics classes in high school, and the textbook was written by Paul Krugman. Paul Krugman,
our favorite
textbook, who's possibly the worst man on earth. But that's how I learned economics in the first place. And it's just so funny how all these concepts that mainstream economists take as gospel, they just are so flimsy.
Right.
And I mean, Bitcoiners love to sort of like develop their own theories about things, but it really is apparent to me the poverty of the discourse in mainstream economics coming from the very top. You have the Biden's Twitter account. I don't think he actually runs it.
No.
We'll tweet things like, we need to, engage in antitrust to stop inflation, or raise corporate taxes to stop inflation, and just like crazy nonsensical stuff, basically. And so it's okay to sort of be heterodox and have your own thoughts about these things. There's no one that really has authority in the matter of economics, in my view. So I think it's fine to develop your own theories.
Just out of curiosity, growing up, did you have a concept for money or wanting to be wealthy, wanting to get rich? I mean, what was your concept of money when you were young?
Goodness, that's a loaded, kind of a tough question.
Well, I feel like, you grew up in a lot of different places. You're naturalized American, but the Americans that I grew up around, and myself as an immigrant, you wanted to get to a certain level of financial security. The dream was, you want a certain level so that you could take care of your family and whatnot. And some people wanted to take it all the way to, Jeff Bezos and going to Mars, but just kind of curious what your take was.
Yeah, so the bulk of my growing up in America was done in Bethesda, Maryland, which is a pretty affluent community. But it's not very private sector driven. It's actually, everyone there sort of works for the government in some way. They work for a government, or they work for like a firm which sells products to the government. And so status in that community was about academic prestige and political attainment, basically. So those were actually really the markers of status, not wealth. You're always doing very well if you live in the suburbs of Washington. You work for the government. That's the only recession-proof, part of the country. And, I think something like 6 of the 10 richest counties are suburbs of D.C., in Virginia and Maryland.
Well, the monetary creek runs through it, right? The money printer
Yeah.
spigot.
No, yeah, there's a river called Rock Creek, which runs north from Washington up through Bethesda and Chevy Chase, and like you can think of that as like the Cantillon River.
Yeah, for sure.
100% unironically. And so that was my like cultural milieu, you know, like all these people that work for the CIA and the State Department. And I did think about that for a while, like
I bet.
going to work for the Foreign Service or something like that.
I could see you as a diplomat, so maybe.
I do a different kind of diplomacy.
Okay, wait, so I want to hear how you got into Bitcoin. So I read that you first learned about it in like 2012 and you were on forums and you thought it was really interesting. And then you finally started to dabble by doing tipping, right? Is that what happened?
Yeah, so I think I read it on Reddit or Slashdot. I was a big Redditor back in the day, believe it or not. And didn't have any money, you know, so like I couldn't buy any.
Where were you living, by the way? Because you graduated Edinburgh and you did what?
Well, I went to college between 2010 and 14, so that's when I found out about it.
Oh, so you were in college when you found out about it?
Yeah, so I was completely broke.
So
I didn't have any money to buy Bitcoin, in case people think I'm some sort of like OG mega whale.
Oh, I thought that.
No, that's certainly not the case. The one thing I did do was I started mining Dogecoin. Because you couldn't really mine Bitcoin in 2013, realistically. You needed ASICs. And so I mined it with like my GPU and my gaming laptop.
So you're a Dogecoin whale?
Well, I threw away the hard drive and I lost all the coins that I mined. So I don't really remember how many it was, but it's like probably in a landfill somewhere, and you know, like if Dogecoin becomes, you know, the global standard.
I wonder how many Bitcoin are in landfills somewhere around the world.
Many, and some Doge as well.
Yes.
So
you stumbled upon it, and like, what made it interesting to you?
The idea that you could turn electricity into like a little money, internet money. And then there was like a Doge tip bot back in the day, which I thought was funny, like tipping people online. And it's just the novelty of being able to make a final settlement with the digital bearer instrument as opposed to using a traditional payment system, which is not really final, that I thought was clever and important. And then, you know, a while later, I sort of dove into the ideology behind Bitcoin. And I remember thinking to myself, wow, these Bitcoiners are so serious. Like, they're taking it way too seriously. It's, like, not that big a deal, you know? Like, let's just have fun. And it's funny because years later, I really appreciate that.
Yeah.
Obviously, it's very serious. But at the time, I thought the Bitcoin community was, like, cringe and, like, too intense. And then after Mt. Gox, I also thought it was dead. And so I took, like, a year off from reading about Bitcoin. And then when it came back, I was like, okay, this thing's for real.
Oh, yeah, that's right. That's what I read, that's what made you think it really has legs.
Totally.
And is that what caused you to go deeper down the rabbit hole? And how did you do that? Like, what were the resources that you used to really learn about Bitcoin?
The Nakamoto Institute website was really key, actually, linking me to all these thinkers that had ideas that ended up being very pertinent to Bitcoin, but they were written before Bitcoin existed. You know, Friedman, Hayek, people like that.
So that's what got you into Austrian economics.
Yeah. So I did my education that way, and then frankly, Seyfedin's book, people really don't like it, but it introduced me to a lot of interesting concepts.
Who doesn't like Bitcoin Standard?
Oh, so many people.
Really?
Yeah, it's wow. Outside of Bitcoin, it's sort of a widely reviled book.
I love that book.
It was very useful for me, and you know, people complain that he talked about gold too much, and like, you know, he talked about sound money without talking about Bitcoin enough. But frankly, I understand it now. If you understand why a gold standard worked and why society valued it, you understand Bitcoin. And if you think the gold standard was stupid, you're just not going to get Bitcoin. So I think to understand Bitcoin, you have to understand gold, and then it follows. So that has been an interesting journey for me, is going from Bitcoin to Austrian economics to really appreciating gold. Not in the sense that like I love gold jewelry or whatever. I mean, I have some. I actually do like gold, but gold from the monetary perspective, it's so misunderstood.
Yeah.
I don't know if we should return to it. I don't know if it's practical. We probably need a new technological medium. But I think the gold standard is incredibly misunderstood even today by economists, and they have an incentive to misunderstand it, so that's why.
So do you invest in gold as well? Your Bitcoin?
Yeah, I have some gold.
Okay.
Yeah, just paper gold.
Okay, interesting. Well, so do you remember an aha moment that you had with Bitcoin where you went from learning about it, studying it, maybe curious, to, oh my God, this has the potential to, change our financial system?
The difficulty adjustment was an interesting sort of lightning rod moment for me, understanding that and the effect it has on scarcity and how you wouldn't ever have a supply response to the price, which is fully novel for any commodity ever. Talking about stock to flow, not in terms of the misinformed model, but the stock to flow ratio, as Eswatini describes it, and the fact that if you use a commodity in a monetary way and it appreciates a lot, then people are going to expend a lot of effort to create units of it. That was a very important moment for me. And then Nick Szabo's Shelling Out, where he talks about the rise of various commodity monies and what features they have, and how adopting commodity money actually has a very strong evolutionary reason and can actually enhance the survival of groups that do it. Those were really key moments for me. And in particular, I think this was in 2017, this was published. Eswatini wrote this paper called Economics of Bitcoin as a Settlement Network. That I think remains one of the most important papers in Bitcoin, where he talks about how you don't actually need zillions and zillions of transactions. How as a settlement network, Fedwire, for instance, that's a very popular interbank settlement network. It does fewer transactions than Bitcoin, but it moves trillions of dollars a day. So I came to understand through that paper, through then investigating how payment systems actually work, that Bitcoin was completely fine in its current state, didn't need to change.
Right.
That, to me, was a big aha moment. I think a lot of people have yet to have that aha moment,
Yeah.
but they should have it.
So did you leave school and go right into working on Bitcoin?
No, so graduated undergrad, moved back to the US, worked as a journalist for a couple of years. Then I was like, okay, I got to go work.
Covering finance?
No, corporate law.
Really?
Yeah.
Oh, wow. I didn't know that.
It was very dull. Yeah. And I was like, okay, this is boring. I want to work in finance. I want to work for Bitcoin. And so then I went back to school. I went to the University of Edinburgh for another dose of Scotland.
Yes, okay.
Because I really like a lot of Scottish Enlightenment thinkers, and so I wanted to physically be in Edinburgh.
Wow.
So that I could absorb, their essence.
Scottish Enlightenment thinkers?
Yeah, I
okay.
mean, a lot of American, philosophy follows
Amazing.
from that. So I also just like the city of Edinburgh, and I wanted the credential so that I could go work for a financial institution
Sure.
and be their Bitcoin guy. It was just a crazy idea I had in my head, and I ended up doing exactly that, but it wouldn't have been something anyone could have forecasted, because there were no Bitcoin analyst roles at any investment bank or asset manager.
Right. Because what year did you graduate? 20...
So my master's, I graduated in 2017, actually.
Okay. Wow.
But I concocted this plan in 2015 when there were no Bitcoin analysts really anywhere.
Right.
You had sort of Chris Berniski and Willy Woo, and that was who else? Okay, I've forgotten his name now. But yeah, there were half a dozen.
Sure.
People treating Bitcoin as an investment.
Sure.
For analytical purposes, and so I was like, okay, I'm just gonna go and become that.
It's interesting, because then some of them retire. It's a quickly
churn.
recycling system.
And Chris is the one that ultimately introduced me to Fidelity.
Okay.
And vouched for me.
Oh, okay.
Because I went to ARK when I was still in school, and back when ARK Invest had their AUM was 300 million. So today it's 30 billion or something.
Yeah.
And I went to Chris and I was like, hey, I wrote this paper about Bitcoin, and I have this website. It was Coinmetrics, and I showed it to him. He's like, yeah, this is cool. The on-chain data stuff is cool. This is a good paper. I'm going to help you out. And so I went to ARC's office and I met Kathy Wood and stuff.
That's cool.
When I was like, no one knew who I was. I was a random student who had like sent Chris a cold email.
Amazing.
And I was like, wow, these people are so friendly. I hope they do well.
Wow.
And then ARC became like this total juggernaut. And then Chris put me in touch with Fidelity, and turns out Fidelity was hiring for a Bitcoin analyst role. And so I just ideated that into existence, basically.
Amazing.
Obviously with luck and with like the generosity of people like Chris Berniski.
Wow, that's pretty cool. I think that's really inspiring because we kind of create our own destinies, especially in this industry. I think there's so much movement and innovation and entrepreneurship that doesn't exist in other spaces anymore where you can't move up as quickly. So
yeah, it's not static. I always tell people, it's very, you can define your own role. You can write your own job description.
Yeah.
Steve Lee did that, right? I think he left Google and he's like, okay, I'm Bitcoin's PM now. And that was just like a thing he did for a while, and then he got hired by Square to do it.
Yep.
So write your own job description, it works.
Yeah. Okay, so I want to talk about some of the areas of your expertise because you are so followed and you do such a great job breaking down some of these very complicated aspects of Bitcoin. One of them where I want to start is Bitcoin mining and the environmental impact. I feel like there are so many misconceptions out there, and I'm trying to do my best to educate myself in a way that I can translate the message to the masses if I ever go on TV. And so I go to your work a lot because you just have done so much work. So first of all, like how much did that take in terms of just like your time and effort to become so knowledgeable in Bitcoin mining and energy? And number two, can you break it down like the simplest, so that whether the audience is beginners or they have family members, friends who are beginners, like how do you explain the environmental impact of Bitcoin?
Well, I don't see it as a cost in terms of acquiring knowledge about it because it's just very interesting to me. So it's a brand new industry, only existed for about 10 years, and it's very consequential, right? It's a $15 billion industry roughly in terms of revenues. And all the miners in the world are probably worth around 30 billion, maybe less today. They've been selling off. And so it's very disruptive. It's like a political, hot topic, and it's changing the nature of the Texas energy grid, and New York's trying to ban it. And we were talking to some Norwegian members of parliament today, and they're very concerned about it. The EU's trying to ban it. And so how could I not be compelled by that, And then it's very directly adjacent to our industry. And so it's just something that I cared about, and so it never felt like a chore to learn about it. But what I did have to do was learn a lot more about how power actually works. I mean, that was fascinating. Those are the only books I read these days are about power market economics.
Really?
Because it's such a deep rabbit hole. It's deeper than the Bitcoin rabbit hole, actually. And I'm a total neophyte there, total novice. But the intersections are incredible, right? Bitcoin mining is going to become integrated into the energy business. Already is happening, and it's going to be really, really fascinating transition. But yeah, I guess I've been doing it like on it because it's not my sort of core mandate at Castle Island. Obviously, we don't really invest much in mining.
Sure.
It's not like a venture investable space, I would say. But yeah, I've been doing it on and off for about 5 years, and I'm also lucky because a lot of these mining companies will take my calls, and so if I do have a question, they will talk to me.
That's great.
That's the only way to really acquire knowledge. So much Bitcoin mining knowledge is, not shared. Certainly not shared outside of mining circles, not shared outside the industry. So the academics that write about it, like fiat academics, they're always on the outside looking in.
Yeah.
They don't have the ability to gain true good knowledge about what's happening. It's only the practitioners that really know the reality. And then it's a matter of blending the practitioner knowledge with sort of like broader data that you can acquire about the mining industry. And so it's an ongoing challenge, but a fun one. Second part of the question was, why is it, why is it not that bad for the environment? So, I mean, for the most part, miners buy grid power, right? And so if you think that buying grid power that's freely available for sale, is like bad, then it's like kind of like the argument's moot in the first place, right? Like buying power is what we do in order to sort of like achieve things. there's not that much we can do without power. So, anybody that sort of like fundamentally thinks that way, like me, plugging an outlet and like using an appliance is like a bad thing. It's like there's no discussion to be had. But if you sort of accept the premise, if you look at the numbers, it's fairly small, right? Probably talking about 10 basis points of global energy production end up, going into Bitcoin. And so that's little, right? And so, all right, let's say you really care about climate change and you think it's crisis, it's an imminent crisis. We have to do something about it. Bitcoin, stamping out Bitcoin, let's say you could eradicate Bitcoin. That's not going to solve the climate crisis, right? The numbers involved in the energy transition and decarbonization are enormous. You have to electrify everything, right? Because we have to stop using combustion vehicles and things like that. So you have to double or triple our energy production. You have to radically change the nature of the energy mix. You have to eliminate coal, eventually eliminate natural gas. You have to scale up wind and solar, probably scale up nuclear, add a lot of batteries to the mix. Those transformations will, let's say the net zero idea was possible and doable and viable. The transformation that would have to occur would take basically all of society's resources. I mean, it's truly, truly radical. It's like kind of the same thing as if there was an alien invasion coming and we had to fully mobilize society. That's the sort of the scale of the resource allocation. You're not just talking about billions of dollars, you're talking about like tens and tens of trillions of dollars, like basically the whole GDP of the world.
Sure.
So if you think there's a climate crisis, which like I totally admit, anthropomorphic climate change is real, certainly concerning, absolutely no questions about that. Expending your energy to stamp out an industry that buys 10 basis points of current energy production will not solve it. It just won't. And now, of course, so, I would sort of like question the motives of anyone that's like, yeah, I'm a climate activist and the way I'm going to fix the climate is by stamping out 10 basis points of consumption. It doesn't really make sense. Now, if you look at Bitcoin specifically, like what miners do and how they engage with the grid, it's pretty benign. So we know that miners are location agnostic. They can domicile themselves anywhere. No other industry is like this. No other industry. Bitcoin mining, the way you sort of liquidate the Bitcoins that you acquire is through the internet, right?
Right.
So there's no heavy machinery or anything. You don't need to be near to like a specific resource. Like it's just electricity and computing and then internet. And there's satellite internet, so you can do mining anywhere. So it's location agnostic, which is a completely brand new thing for an industry, which means that they can identify stranded or cheap underutilized energy, of which there's tons, because energy doesn't really travel more than about 500 miles without high voltage transmission. So electricity is a local phenomenon. It's not globally fungible, right? It's highly localized, and there's these stranded pools of energy all over the place. And if you look where miners are sort of active, it's in those places. So historically, it was Southwest China with all the stranded hydro, which would just be curtailed. There was no demand for it. Right now it's in West Texas, where there's huge amounts of load generation. There's not a lot of load, and there's a limited ability to transmit it. You're looking at upstate New York with hydro. You're looking at Quebec, British Columbia, Washington State, Siberia with hydro. I mean, all these places have one thing in common, which is the energy isn't being used for anything, right? There's no alternative economic use of the energy because there is no real ability to transmit it a long way to get it to load centers. So, so Bitcoin miners, like, they're not plonking down data centers in the middle of cities where they're going to be contributing to like grid congestion or scarcity events. It's the opposite. They buy up energy that's just really not being used otherwise. And people that think Bitcoin miners are contributing to scarcity, they just don't understand power. It's not that they don't understand Bitcoin, they just don't understand the way that power moves around the grid. So that's sort of like the fundamental thing to understand. And then you can have an argument about like how green is the power that goes into Bitcoin. It's sort of relatively green actually compared to most industries, that's for sure. And it can be 100% sustainable easily.
Isn't it more green, more renewable energy in North America than fossil?
Bitcoin
mining?
Yeah, so I mean,
thought it was.
If you look at the Bitcoin Mining Council data, it's kind of 60%
Yeah.
sustainable
Yeah.
is what their sample says, which is about 50% of the hash rate. The overall sustainability of the U.S. grid generically is about 40%.
Yeah, that's right.
So, and that's
It's
hydro,
actually more
nuclear, and wind and solar. So,
In your energy research, do you also come across the Alex Epstein, the arguments that actually we need fossil fuels, that renewables are unreliables, and we shouldn't be veering in that direction?
yeah, I was reading the second book just now, Fossil Future. I recommend it.
Okay.
I think he's a great thinker, and the urge to like stamp out heterodox thinkers that have different viewpoints from like the political elites, basically, that's a dangerous urge, right? So we should encourage, commentary from people like Alex Epstein. I don't know if I go quite as far as him. Like, I think it may well be possible to have a renewable transition. Wind and solar have tons of problems. The fact that they are intermittent and variable, that's a real issue.
Yeah.
You're not going to be able to replicate baseload. You're going to have to radically reshape the way that we consume power if you are going to make them a majority of your generation.
Sure.
I mean, it's going to be really, really, really challenging to do that. I think the better solution is to prioritize nuclear. But yeah, I basically, I think his arguments are very compelling. And, his basic point is using conventional sources of generation allows us to control the planet in a way that gives us high leverage. And so we're able to control climate, and he has this chart of like the reduction of deaths from climate-related disasters. And, it's just like a straight line down, basically, as we were better able to control floods and earthquakes and hurricanes and things like that. So, I think he makes a lot of really inconvenient but really good points. But yeah, of course, he's sort of really reviled by the climate crowd, that's for sure.
Can you crystallize your thoughts on ESG?
Yeah, I mean, so ESG is just another word for like political control of capital, right? So I'm in the capital allocation business. My job is to sort of generate returns for my investors. The objective of ESG is to add an additional mandate to anybody that invests, which is, okay, generate returns, but also you have to layer on these like political restrictions on what you can do. And that's just fundamentally what it is. Now, a lot of people say, no, like, Nick, you should be investing, with like a moral, eye. And to be clear, I do, right? I mean, the reason I am an investment professional is because I thought it was the highest leverage way to support Bitcoin. It's like, okay, what can I do? Can I code? No, I'm not going to, review commits on Bitcoin Core. Can I like build magnificent bridges? No. Like, how am I going to contribute? Okay, high leverage way. Allocate capital to Bitcoin startups. That's obviously the number one best thing I could possibly be doing to advance Bitcoin. So I do invest with a moral eye, right? Like, of course, it should be implicit as an investment professional. I think, you want to harmonize your views on how the world should be with what you do. And I'm very lucky in that I can do that. Now, if I was like a fixed income trader or something, it's like, well, you don't care about the substance of the bonds that you're buying and selling. It's like, oh, this is Tesla, Tesla debt that I'm buying. Oh, well, I don't like Tesla, so I'm going to refuse to buy. Like, obviously, most people in the investment industry can't care about what it is they're trading. It's just like, they're making money. And then if they want to be altruistic, maybe they can, donate to charitable causes. I'm in the lucky position where I'm aligned. My sort of ideology and then my actual job. ESG is like a perversion of that, basically. Ultimately, the objective is through the language of like altruism and good and ethics, is to commandeer the architecture of capital and take this private industry and effectively render it into an arm of the government. That's the objective. Is to undertake a kind of a socialist takeover of what was a private industry, but is increasingly becoming public. So that's the idea. And then the theory of ESG from like promoters. Remember, there's a huge cottage industry of like ESG analysts and ESG appraisers. So like the reason that exists is just that. So that's like the reason ESG is so popular within like the asset management community is because there's like a huge cottage industry in like evaluating it. Right? So it's just like simple economics. It is popular, people. Oh, you're right. So the theory of ESG, the theory to steelman it is that you're going to make better allocative decisions if you layer on governance and environmentalism. It's like, oh, if I invest in clean energy stocks, that's going to do better than a portfolio of oil stocks. Not only is that wrong, the inverse is true. If you invest in like sinful stocks, you're probably actually going to outperform the market overall because there's entities that are divesting. They're forced to divest from like oil and gas stocks and tobacco, right? Yeah. So if you want to be the best possible, allocator, you have to be totally sort of like nihilistic with regards to like the moral contents of the things you're investing in. If you limit your investment universe to only companies you think are good for the world, that A, you're like artificially limiting your selection, and B, now you're competing with all the capital that can only invest in that subset. Right. So if you now broaden, you're like, okay, I'll look at everything. You have tons of options, and you can invest in the disliked sectors that the government's like trying to tell you not to invest in. So, then you're going to be buying a greater share of the cash flows of those real businesses. So you're actually going to outperform if you do like counter ESG. So the theory behind ESG that a lot of ESG pushers will allege, it's a bad theory. Like fundamentally, limiting your investment universe and investing in pools that the largest institutions in the world have to invest in this stuff, that's a great way to guarantee that your return's going to be bad.
Well, I dislike the idea that the government is essentially picking winners and losers, which has been increasingly the case. And I'm kind of curious your thoughts on just sort of really this intersection that we're experiencing of a new paradigm that Bitcoin represents, which is financial freedom and really truth based on this mathematical programming, versus the government system that's really headed more and more towards authoritarianism and socialism. Like, how do you think that when the two worlds really collide, what do you think that's going to look like? Is it going to be a chaotic battle to get us on the Bitcoin standard? Is it going to be peaceful? Is it going to take us a really long time? Like, what do you think?
Yeah, I mean, the collision is happening right now. So, the EU has this whole thing where they want to ban Bitcoin because it has proof of work in it. Do they care about proof of work? Of course not. Of course not. Europeans that mine Bitcoin are doing so with relatively clean energy, right? So Europe should actually want all the Bitcoin to be mined in Europe if they care about the emissions. Why are they doing that? Because interest rates are negative and because government debt is a bad thing to hold. That's just the truth of it. If you're living through financial repression, nobody in their right mind would hold a government security when inflation is 8% and interest rates are 2 or 3%, right? You're just guaranteed to lose money. So they have to force ways to get people to hold the government debt. And so that's what we're going to see in the next decade. They don't want people to hold alternatives like gold or Bitcoin, right? Because that is capital that is exiting the system and it's not supporting the solvency of the government. So monetary repression, which is, to be clear, what we are currently living through, it's happening right now, is a system where the government resets its balance sheet and deleverages by confiscating the savings of ordinary people. And, so like that's happening. And they do it, they'll like probably, you'll see a lot more regulations like forcing various financial institutions and pools of capital to hold more treasuries, And so it's a battle basically. Like the government wants to bail itself out. And they want you to hold and buy treasuries or like various forms of government debt, and they don't want you to hold the alternatives. So this whole thing we're seeing in the EU right now about banning Bitcoin, that's just a consequence of monetary repression. Sure. So this is like the battle of the next decade, right? And we had this in the 1940s right? Every government was incredibly indebted after World War II, and they had to let inflation run really hot, and they commandeered. Actually, there was still rationing and things like that. So it's like kind of what's happening now is going to be a bit of a throwback. They had price controls on things.
Yield curve controls.
They did have yield curve control, yeah. They didn't call it that at the time. But so basically we're running back the 40s. If you were more pessimistic, you could say we're running back the 20s with the various hyperinflations in Europe. But so that's it, basically. It's like governments, it's always a tug of war, how much freedom do you have to invest in whatever you want to protect your portfolio and your savings versus like what are the government's objectives in terms of achieving its own deleveraging. And the different thing now as compared to like maybe the 30s when gold was banned is like it's very hard to control Bitcoin. It's very distributed. But so we're going to see like the state doing these reprisals against the Bitcoiners and stuff like that. That's just like that's inescapable because a world where Bitcoin succeeds is a world where it disempowers the modern state. So that was always going to be part of the story. We could never have the sort of like peaceful way.
Yeah. Well, what are your thoughts on what's happening right now with the Fed trying to tighten and liquidity being withdrawn from the entire system? And, many Bitcoiners in the space, Jeff Booth, who I talked to today, Lynn Alden, they think that they're going to keep tightening until something in the system breaks, essentially. And then the conclusion is they always print, right? But how do you see this playing out?
Yeah, it's fascinating to see like some of the most dovish members of the Fed turn into mega hawks, overnight. Because they completely missed their mandate on inflation. So Luke Gromen likes to say the Fed has a shadow third mandate, which is to keep the treasury market functioning. And I agree with that. So it's not just inflation and unemployment, which they've obviously failed to uphold those mandates, but there's a third mandate which actually takes precedence, which is making sure the market for government debt works. And you see stress emerging there already. I think, as liquidity continues to tighten, like something breaks is basically like the government debt market starts to fail. That would be the thing that breaks. They're sort of okay with stocks selling off, That was actually an objective. They wanted to do the reverse wealth effect, aka just destroy people's wealth so they would spend less. That's what the reverse wealth effect means, but they always have to do these euphemisms. They can't say what they're actually doing because it's kind of horrifying, right? Like, make asset prices go down so people are poor and so they spend less on stuff to get inflation down. I think I agree. I'm inclined to agree, and I think also it's impossible for the Fed to sort of tighten in line with their objectives because if they keep hiking rates, then the government is going to default, right? It's probably in the 3% range where the government starts to have difficulty servicing its debt. And, not to say anything of the highly levered corporate sector, well, you see tons of bankruptcies too. So the question is like, do we just keep pushing and we go to sort of like full austerity and default, or do we go for the inflationary exit valve? I think everybody knows it's the latter.
Right. Well, you commented on a really interesting thread in the last couple of days, and I was wondering if you could touch on it just really from 30,000 feet above the ground, the idea that China might be preparing for war. Because I feel like it's crisis after crisis, and inflation was one crisis, and we have the war in Ukraine, we have supply chain issues, all of this is I think gonna take effect in a couple months with regards to like the wheat shortages creating famines and job losses and all of that. We haven't seen the effects yet, but what are your thoughts on kind of what's happening geopolitically, and why did you comment on that China thread?
Yeah, from Kyle Bass. Yeah, I mean, the thing is like there's no like guarantees that like things always get better. Sometimes things can get worse and worse and worse, and then continue to get worse, and then also get worse after that, right? So, there's no guarantees in life that we have mean reversion and that we stay prosperous. Like empires collapse and stay collapsed, right? So if you're living through a period of collapse, a lot of people are going to be really optimistic and think, well, change is just around the corner and it'll get better. Sometimes they don't, right? There's a lot of momentum in these things. And so the 2020s is going to be a decade of immiseration, right? Of deglobalization and of things getting more expensive. Inflation will be an inflationary decade, just structurally speaking, of collapsing demographics and of nations fighting over the resources that are left. And like that's just like me looking at the world with my eyes wide open, observing what's happening. Is that a good thing? Do I want to live through collapse? No. I would rather live through an incredibly prosperous decade when things are calm. But that's not the decade that we have. So, deglobalization is occurring. No one's going to trust, like U.S. securities markets anymore, right? They've politicized them completely. China, is a rising superpower, and they perceive that the U.S. is withdrawing from the international sphere, which is correct. With the exception of funding sort of like a proxy war in Ukraine, like the U.S. is structurally withdrawing. And China will see that opportunity. Now, I don't know if they'll invade Taiwan or anything like that. The point of that thread was to say, any nation out there that's not an explicit ally of the U.S. is going to start to question the ability to save by acquiring U.S. assets, right? So they're going to start to doubt the quality of American equities and fixed income, just general securities markets as a piggy bank. And we demonstrated this obviously with Russia in February, where the central bank reserves are the aggregate savings, accumulated savings of the nation. So we confiscated that, and we actually expropriated it. We'll probably put it to use somewhere else. And then we started seizing yachts of oligarchs. There wasn't a lot of process around this. It wasn't like there was like a legal process or anything. It was just sort of done on an ad hoc basis. And my point, and I think I don't know if Kyle Bass had this point, but my point was other nations that are somewhat hostile to us are going to be thinking to themselves, okay, so America did this to Russia, G20 nation, very economically significant nation. What if we offend them in some way? And a lot of people would say, well, like, don't invade your neighbor. But that rules out every country ever, right? Everyone invades their neighbor or has done at some point, right? So if the standard for like retaining unfettered access to U.S. securities markets is never do something that offends the U.S., that's a bad standard. That means that no one is going to have property rights if they own U.S. assets. So my point is, as China considers invading Taiwan, or prepares to, or intends to, they will probably start considering divesting themselves of U.S. assets. They own $1 trillion in treasuries. There's estimates that they own tens of trillions of dollars of U.S. equities, right? Because they have this trade surplus with America. They used to redeploy it into treasuries. Now they redeploy it into hard assets, but generally dollar-denominated assets. And so it's various portions of our actual like capital base and like our corporate public equity, they're owned by China in some way. And obviously like Saudi Arabia is kind of in the same boat, right? So the question is, what if they start to think to themselves, okay, is the U.S. going to sanction us, right? And I think it's very possible that it would come to that eventually, whether it's a Taiwan invasion or something else. And so, for the first time, I think the credibility of the dollar system with the treasuries being the ultimate store value asset is in question, and rightfully so. I mean, the U.S. has given us cause to question these things. And so my sort of prediction or guess is that we're going to see a continued outflow from both treasuries, but also just U.S. securities markets as a consequence of this. And sort of that'll be like a structural thing, whereas there was a structural inflow where the Americans bought things from abroad, they imported products and goods and services. The people selling us those things took the dollars and redeployed them into treasuries or other securities. That is, we're going to have deglobalization now. We're going to buy fewer things from abroad, and they're going to buy less of our financial assets. So that's the point, is like, be concerned, I guess.
Well, so I'm going to tap into your debate skills, the arguing for and against something. So in this inflationary decade of deglobalization, what's the bullish and bearish case for Bitcoin?
Well, bearish would be that definancialization, which will also occur. Like it's always a push and pull between commodities and sort of financial assets, right? And financial assets have won the day for the last few decades. In the push and pull there, that commodities and commodity production, I think energy is like 4% of the S&P 500. It's virtually nothing. They continue to get more important, vitally important, and financial assets are kind of left in the dust.
Tech is like 30% of the S&P.
Right, yeah.
But contributes to like 2% of GDP and jobs, I think.
Well, yeah, I mean, it's very Cantillon-esque for
Yeah.
sure. I mean, it's a tiny, tiny subset of society that, reaps all the benefits. So, yeah, I would say partly the bear case would be that, the market determines that the production of actual goods, physical commodities, energy, agriculture becomes much more important.
And that would be bearish for Bitcoin.
And the Bitcoin's kind of an afterthought in that, and sort of like, I guess part of that would be like, in theory, a lot of the liquidity that went into Bitcoin was just this excess from like the fiat system. I think we've already seen a lot of that withdrawn. Another bearish case would be if governments achieve, extraordinarily successful plans to realize monetary repression by imposing capital controls, and we get capital controls all over the West, and they become very adept at sort of stamping out these access points to Bitcoin. I think that'll be difficult, but that would be part of the bear case as well. And generally speaking, inflation is not good for financial assets. Certainly it's not good for fixed income, obviously, and it's not particularly good for equities either. Corporates, they sort of lose the ability to forecast the future, right? That's what inflation does. It sort of robs you of the ability to plan ahead because you don't know what your treasury or what your cash flow is going to be worth a year or two from now. And so the question is Bitcoin going to perform like a stock in a rising inflationary period, which would be badly, or is it going to perform like gold did in the 70s in that inflationary period where it went from $35 an ounce to $630 an ounce in a year or two? And so that's sort of like the big question.
Well, so the bullish case, what do you think would prompt that?
The bullish case would be Bitcoin realizes its destiny as the ultimate form of collateral and liability-free collateral in particular, right? So now we know that treasuries are liability full. They're impregnated with liability, which is to say that the issuer can just eliminate them and seize them from you at a moment's notice, even if they've been reliable for the last 50 years. So the bull case would be that Bitcoin replaces them in the core architecture of finance, that we have this full deglobalization, this fragmentation of currencies. As institutional trust is lost, as the US retreats and it can't really backstop the value of the dollar with its formally expansionary objectives and all these institutions and controls, and that in that sort of anarchic setting, Bitcoin gains prominence as a credible, neutral settlement network and monetary medium, and that it would become a way to settle international trade and commodities. They may not be priced in Bitcoin, but those trades might be settled in Bitcoin. And then, in the bull case, you would say it'll have a more important role in corporate finance, but then also at the nation-state level, where it becomes this sort of unimpeachable asset that you would hold to back your currency, and then maybe in longer term, Bitcoin might replace gold as like the specie in a free banking system or like a neo-gold standard. That's sort of like the ultimate bull, and in that case, you would. The analysis you'd do would be like you'd look and see how much share of GDP gold represented during the classical gold standard era, and then just pull that analysis forward with Bitcoin.
So do you believe in the bullish case?
It's plausible.
Or like more in the middle, between the bull and the bear?
Well, even the bear case,
Yeah.
Even in my bear, I mean, the true bear case is like there's a catastrophic bug and Bitcoin disappears and vanishes, or some incredibly persuasive competitor comes along and everyone uses that instead.
Do you think that that's possible?
I haven't seen anyone competing with Bitcoin in the ways that matter. They compete with Bitcoin in these sort of like contrived ways, like TPS, and they sometimes make parts of Bitcoin worse and think that makes them competitive, like in creating proof of stake.
Right.
And I'll add, like, all the TPS and the utility in the world didn't save Terra, right?
Well, I wanted to ask you about that. So why don't we cover that before we wrap up, because you were one of the original folks out there criticizing this, not necessarily very loudly, but you kind of predicted that this could blow up, and it did, and it totally failed. And I feel sorry for the people whose life savings were totally wiped out, but at the same time, that 20% yield seemed very unsustainable to a lot of people in the space, and you guys were calling it out. So tell me why you knew sort of before this meltdown happened that this could be a failed experiment, and sort of what your take is on the fallout right now. They're trying to rebuild some forked version, right? And maybe there's going to be civil lawsuits.
Yeah, there'll definitely be lawsuits and probably government action too. I mean, I'm sure Korea will have to say something about this. Probably 200,000 Koreans lost money in it. At that point, it becomes a government matter, frankly.
Yeah.
Terra, the yield was just the cherry on top of the bear case. That was the thing that made it obvious to me that it would collapse and soon. But the mechanism itself was flawed, right? So the idea was that you could have the two currencies. One of them is the equity-like currency, and the other one is the dollar stable currency. And you backstop the dollar stable currency with a promise you can always convert it into the equity currency and then sell that for real dollars. But the credibility of the two systems is completely 100% correlated, right? Because the value of Luna is kind of a function of like the success of Terra, of UST. And so if UST starts to fall, then it's like, okay, as a Lunar holder, I'm like, okay, well, A, the system's failing, and B, they're going to dilute me as a Lunar holder enormously to back the peg, right? Because that was basically the plan is like there's controlled dilution of Luna, creation of new units of Luna to support UST. So as a Lunar holder, rationally, you immediately divest when you see the peg starting to break. And that's exactly what happened. So the anchor yield being 20% is what caused this whole thing to be so catastrophic. Like it would have, if they hadn't had the anchor and the very strong sort of promotional nature of the system, it wouldn't have grown big. It would have just lived in obscurity and died in obscurity. Like it would have still failed, but it just wouldn't have failed as badly as it did, catastrophically wiping out all these billions of dollars in wealth. So the anchor yield just made UST grow to an enormous size at 18 billion before collapsing.
Who doesn't want 20%?
Right. And it grew Luna to 40 billion as well, right? Like growing UST grew Luna because you needed Luna in order to create UST. So the whole system, you can actually strip UST out of the analysis, like no one used UST for anything aside from anchor, and realize that it was about the anchor yield and Luna, right? So the objective really was create this DeFi protocol. It became the biggest lending protocol in all of DeFi by total value locked. Subsidize it and use that yield to ultimately juice the price of Luna. And that was what they did. So yeah, if you hadn't had the anchor thing, it would have still lived and it would have still died, just on the basis of the mechanic being fundamentally unsound, right? Luna didn't have an exogenous reason that it was worth anything. And also, there's the calculus that I ran through as a Luna holder. You just wouldn't want to hold Luna during a time of stress. It makes no rational sense. And so, yeah, the system, was fundamentally unsound with or without anchor.
What do you want people to know that witnessed that meltdown? And just in general, there's this huge surgence now of Web 3.0, DeFi, these platforms that say they're going to revolutionize banking, offer these yields. Like, what do you want people to know?
Yeah, I mean, look, DeFi as it's currently implemented is full of really, really bad ideas. However, the notion of encoding financial contracts and, putting them on blockchains, I think is great. Obviously, that's going to be a cheaper way to do things than having lawyers and accounting firms manage the back office and having large financial institutions with shareholders, take a cut. So I do fundamentally believe that DeFi is sort of a good and important thing. The way it's implemented now is terrible. I mean, it's full of all these subsidies. I wrote a paper a while back called The Paradox of DeFi. One thing I talked about was DeFi is full of subsidies. So basically, like Anchor, where it's sort of token related. So and Sam Bankman-Fried actually admitted this on Odd Lots, which I thought was incredible because they participate in this. So basically, it's not enough just to have like a lending protocol where you create a market of lenders and borrowers and whatever. All these DeFi protocols also issue their tokens and they feed them to the people providing liquidity, and that's called yield farming. But basically, it's a way of subsidizing growth with the distribution of tokens which obviously is not going to be sustainable. Most of them are just de facto securities. There's just no getting around that. And so, I mean, it's an interesting model. It's like a bank, like giving bank equity to, everyone that, it's like giving you equity in Wells Fargo every time you take out a mortgage or something. It's interesting, but it's kind of unsustainable in that these tokens aren't going to be around forever. The SEC is obviously going to have their word. And you create these weird distorted incentives where your incentive becomes to just chuck liquidity into these things and in a very mercenary way. And then when liquidity is withdrawn, they just don't look very attractive, or they collapse in the case of Anchor. So, DeFi's got other issues, like fundamentally the way that, the financial regulatory regime works in this country is you kind of have to know who your counterparty is in a financial transaction. You just sort of have to. That's the way it works. Do I agree with that? Not necessarily. I think AML and KYC is a huge waste of resources and doesn't achieve anything good. But, FinCEN sees things differently. In DeFi, you're interacting with a pool of thousands of unnamed participants whom you have no relationship. You don't know who they are. But that's sort of the orthodox model of DeFi, whether it's Uniswap or Compound or whatever. They're going to have to figure out how to permission liquidity, institutionalize DeFi. They're going to have to figure that out in order to avoid incredibly onerous regulation or enforcement. I don't know what form it's going to take. But so that's sort of like a huge structural challenge. So, fundamentally, I think the ideas being presented are very good. I think they're being implemented very naively. And the space is due for a reckoning, for sure. And Terra was all of the worst parts of it. Basically, it combined, all these venture firms investing in it to give it the veneer of credibility and doing no diligence really on the underlying mechanic. It combined false promises of decentralization, like fake decentralization. UST was pitched as, the only decentralized algorithmic stablecoin. It was false. It wasn't at all decentralized. There was an organization running everything, doing.
There was a CEO. Everyone flooded to his Twitter page when this all broke out.
Yeah, I mean, it was just like so obviously false a representation that it was decentralized that I couldn't believe that people were like, we need UST because we need a decentralized stablecoin. It's like, well, they're not. That's just a thing that they assert. That doesn't make it true. So it's the same thing with DeFi. Like, so much of it is covertly centralized, and they use the language of decentralization to imply that the structures they're making need to exist. It was, as I said on my panel, it was reckless financial engineering, right? So you get people reinventing these Ponzi-like structures and MLM structures just on a new architecture, which like supercharges them and makes them global. It involved unregistered securities. Certainly, that's what Luna was, and it had this Ponzi-like mechanic with the yield. It was literally the worst parts of DeFi, and it touched on every single one of them. Like, people would value Luna or Anchor protocol on the basis of like the total value locked, which ended up being illusory. The total value locked in Terra disappeared overnight, so there was no persistence to that. But that's how people value DeFi protocols. So basically, everything that's wrong with DeFi was perfectly encapsulated in Terra. If we look at it as just like a black swan or a shock or like an attack, it was like Citadel that did this or whatever, people have those conspiracies, you're going to miss the point here. The point is learn from the bad structures and incentive models that were in place and really reflect on it. And if people dismiss it as like just like a hiccup or an unfortunate accident, they really need to learn from it, because those, DeFi is going to struggle with these issues for a long time.
Well, and I'm glad we have an industry where failed experiments are allowed to kind of fall by the wayside. They're not saved or propped up or bailed out like we have in the traditional system. So
I agree. We didn't cover ourselves in glory this time. To be honest, we did fail to self-police. The information market didn't clear. The voices that were critical of this stuff were not really listened to. And outsiders didn't have the opportunity to, people that understood economics, and I actually reached out to quite a few economists and explained Luna to them because I wanted their take. Once I explained it to them, they were universally in agreement that it was going to fail, but they didn't have the opportunity to share that because it was so complex. It was incredibly complex. And that's another classic crypto thing, is make your system very opaque so that no one can criticize it, so that the barrier to entry for criticism is too high.
Have you shared publicly what percentage of your wealth is in Bitcoin?
Oh, it's like more than 100%.
More than 100%. You have gold.
Leverage.
You leverage?
Leverage gets me over 100%.
But you tell people to be careful with leverage.
Yeah, I mean, don't follow my model. I'm not
do as I say, not as I do.
anyone to do it. I'm like very comfortable taking risks.
Okay, wow.
But yeah, I mean, I guess it depends if you count like startups and funds and things like that.
Well, to wrap this up, it's been such a pleasure talking to you. I know there are a lot of folks out there that are a little nervous about this whole correction. They feel uncomfortable with the price dipping. They think maybe it'll go even lower. We have this, the volatility in the macro environment at large. Just what are your takeaways? What do you want people to know, or what are your thoughts on where we're going maybe in the near term?
Well, my very trite piece of advice for people that feel bad about their portfolio is just de-risk if you feel bad, right? Because you should get it to the point where you don't feel too good or too bad about it, right? So if you're psychologically unhappy with your exposure, then reduce the exposure. Not like it's like very, very hackneyed advice. In terms of macro, it's really depends on what the Fed is going to do, unfortunately. What a terrible system, right? What a terrible system where it depends on like what 8 people think.
Yeah.
So, I wouldn't, I would construct your portfolio such that you have the ability to react to extremely dynamic changes over the next year or so, right? As we learn what sort of the outcome is going to be, because we're still in a state of uncertainty over how much the Fed's going to tighten, whether actually they're going to reduce the size of their balance sheet, or whether they're just going to blow up the balance sheet to $30 trillion as the Treasury market starts to fail. So we don't know what's going to happen. I certainly don't know. So I would, if I were to give advice, I would say have your portfolio such that you can be dynamic and react, especially if there's like an enormous sell-off, which is possible if they keep sucking liquidity out.
What's the lowest you think Bitcoin could go?
I mean, Bitcoin has surprised me to the downside so many times. I mean, I remember, what was it, in 2020, March 2020 was scary, but for other reasons, when we puked down to whatever. But 2018, when we puked down to 3,100, that to me was shocking. And then I think I learned, never underestimate Bitcoin's ability to disappoint you. So yeah, that's why eliminating leverage is important.
Yeah.
But I mean, look, the next decade's about refocusing on producing real goods and services. So I would focus on your fiat mining job, and then make sure you have marketable skills and can turn those into fiat, which you can then turn into Bitcoin strategically if you get the opportunity. But yeah, I mean, it's an incredibly exciting time. I mean, we're talking about a potential move away from Bretton Woods 2 to something else.
Yeah.
But that also means it's going to be an incredibly dramatic time.
Yeah.
When governments are doing this, the unfortunate reality is they plunder the savings of regular folks,
right?
Whether it's through inflation or direct monetary repression. And in a hyperinflation situation, which is on the table, not for the US, but certainly on the table, the aggregate savings of a nation go to zero and you start from scratch. So it means a massive redistribution of wealth. And that's, those are the kinds of things we can sort of look forward to in the next decade.
I can't wait. You're interviewed by a lot of journalists, by the way. What do you wish you were asked? What do you wish you were asked?
That's a good question. I mean, I actually got a lot of different... normally, I wish to be asked about like new things as opposed to the same questions I get, and I think I give you good grades for that.
Oh, okay. I asked you some new ones?
Yeah. No,
Well, I appreciate it. Thank you so much. Look, everybody, I got Nic Carter, so you can now stop writing to me about it. But thank you so much. Appreciate it.
They're just going to ask to bring me on again, I guess.
Yeah. Okay. We'll wait a year.
Glad we could do it. Thank you.
Thank you. Okay, wait. So there is a question you want to be asked. What is it?
So yeah, we restarted the interview for this. So I remember what my answer was to the last question, which was, what do you wish you were asked?
Yeah.
And I told Natalie that it's, what are the, really bad things that could happen in Bitcoin, such that listeners would hate the answers.
Yeah, so what are they?
So as I said, like, listeners won't like it, but I'll say it at the risk of being canceled.
Yeah, what are ways in which Bitcoin could fail?
Yeah, I think you have to be willing to fire your fans. So, I would say one interesting way it could fail would be it becomes a de facto proof of stake network. So nothing changes about the code. It's not like we write proof of stake into the code, but the big custodians and exchanges, as like, let's say the security budget drops and fees don't materialize and we have a lot of halvings, they end up wielding a lot of control over Bitcoin. They start maybe altruistically mining, so they take it upon themselves to undertake the security of the network for business reasons, right? So it's like, I don't know what an analogy would be, but because they have a financial reason to care about the functioning of the Bitcoin network, they actually, as the miner budget goes down, the security budget, they start themselves doing their own like sort of proprietary mining pools or they lay out their own mining projects. And that would basically mean that their control of Bitcoin would be really direct, thus meaning that
Proof of stake,
it would be effectively proof of stake because you'd be delegating your coins to these custodians and they would control consensus. And that's like kind of plausible in my opinion. It would take a long time, I think. Like a lot of the sort of like Bitcoin fudsters think that the declining security budget thing's like just around the corner, which is not at all true. But yeah, that would be like one failure mode I could anticipate.
Do you have others? I mean, I know you mentioned a catastrophic bug that you can't predict.
Yeah, the thing is with a bug is you can always recover from it because like Bitcoin is like a set of ideas and so you can't kill an idea. So like we would just restart the ledger no matter how bad it is. That would be black eye. I mean, the quantum threat I would say is actually real. Like I used to think the other way, but I think we're probably underestimating the pace at which quantum computing can adapt because we can never forecast the rate of innovation. It's like, could you have forecasted 5 years ago that we would have this level of quality generative image where you give it a prompt in text format and it creates like a perfect image of like
AI is moving so quickly.
Like a bunny riding a bicycle or something. Like it can do that now. So it might be the same with quantum. Who knows? It may progress faster than we expected, which actually really imperils the sort of structure of Bitcoin. Elliptic curves and Schnorr would be imperiled. A large portion of all coins are in a quantum spendable state. Later models of addresses hashed the addresses, and the hashes are not quantum vulnerable, but like Satoshi's coins, for instance, and coins where the addresses are revealed, the pub keys, those are quantum vulnerable. Obviously, we don't have quantum computing that can break elliptic curves yet, but that would be really, really messy. You would basically want to halt the blockchain, create new signatures that are much more costly in terms of data overhead, and then have a way to allow people to sort of like declare ownership of their coins at a certain point in time, and then restart the blockchain with like the new architecture. It would just be a mess.
But that would also like destroy the internet security in general. Every email, every encryption, everything would be like basically
but that doesn't mean it can't happen.
Right.
Just because like a bad thing would be really, really bad.
I get it. This is the doomsday portion of the interview. Perfect.
Okay, the last thing I would say is like someone actually creates a good algorithmic stablecoin, believe it or not. So I just spent the whole interview like talking about why they won't work. But a version of Bitcoin where Bitcoin could be credibly sort of like somewhat stable relative to like real goods and services or the price index. Satoshi and like previous cypherpunks, like they clearly saw that as a goal. Satoshi explained that you couldn't do that for Bitcoin because Bitcoin doesn't know what the price is. It would need Oracle. Satoshi didn't add that you'd need an entity to like back Bitcoin, right? But if you could build an algorithm with a monetary policy that's actually more reactive to like the economy, that would allow you to have something that's more price stable. And it may be possible. I don't think it would sort of like fully compete with Bitcoin because it would obviously be more discretionary. But that's sort of like one thing I sort of could imagine.
Okay, and the percentage chance of these, because you're over 100% Bitcoin, so you can't think that any of these are very likely.
Each of them is like in the 5 to 10% range.
But that's a lot.
Yeah, I mean, it's like a risky business.
All right, well, that concludes this coin story addendum. Thank you. No, but seriously, very interesting. Now I'm going to study up on algorithmic stablecoins a little bit more, but thank you.
My pleasure.